Welcome, everybody. Hopefully everybody can hear us. Welcome to this in the series of BOQ Specialist webinar events focusing on finance and economic updates. I can see a number of people have already joined, and we've got a few more joining here. I can see a couple of people have already found the chat function, which we'll be using to take questions. So if anyone that has got that up and running there could give me a comment to let me know that you can hear us loud and clear. While that comes in, hopefully everybody can hear me. As I say, if someone could reach out in the chat function and let us know that everything's working okay and that our technology is up and running. My name's Daniel Mcdonough. I'll be hosting this evening's economic update. I'm brought to you on behalf of BOQ Specialist. Thanks to those of you that have let us know that you can hear us. I look after residential banking, student and graduate lending for BOQ Specialist, and it's my pleasure to be here as the host tonight. As many of you may know, we've been running a series of webinars by way of providing information and economic updates to our clients on specific topics. Tonight's will be a general update, and we are very lucky to have with us tonight the Chief Economist from Bank of Queensland Group. Peter Munckton is our Chief Economist and has been for around 6 years. He's had an illustrious career as an economist here in Australia, notably working with the Australian Treasury, Bankers Trust, Commonwealth Bank, and among other accolades, he co-authored a report on the future demand and supply of finance for the funding of Australia's future project. That report received wide press coverage and was the subject of feedback for the Australian Financial Trust and Treasury, as well as the Australian Centre for Financial Studies. We thank Peter for his time tonight, and Peter's going to provide us with a general update as to the economy in Australia. We're obviously keenly aware, I myself am in Victoria and still under lockdown measures, and we're keenly aware that those impacts here are significantly different to the rest of the country. Peter is coming to us from Sydney, but he will take a national view and touch on some of those differences around the country that we are feeling along with you. I do encourage you, we've still got a few people joining, so I do encourage you, as Peter is speaking tonight, if you have any questions, please feel free to type them straight into the chat box there on your screens, and we'll note those and we'll come back to ask Peter those at the end of his presentation. Or if you want to hang on to your questions and type them up into that chat function, when I call for questions at the end of the presentation, I'll repeat those and make sure that we get an answer, the best answer we can for you from Peter. So once again, looks like we've had a few more join in just the last couple of moments. So I hope everybody has their volume up, can hear. Please do utilise that chat function, and we will throw to you, all of you out there that are listening, for any questions you might have at the end of Peter's presentation. So I'll now hand over to Peter for him to kick off this evening's webinar. Peter Munckton, Chief Economist for the Bank of Queensland Group. Welcome. And
Thanks very much, Dan. Thanks very much for those kind words of introduction. I couldn't have written something better myself. So as Dan said, look, I'm going to talk for about 15 or 20 minutes. I think we've got 45 minutes, I think it is, Dan, for this session. So I'll speak for 15 or 20 minutes, and then we'll just open up to questions. Because after all, I think what's more important, as opposed to me just giving a presentation, is to actually hear what you guys actually want to speak about. So please, any questions on any topic, don't stick to the things I've spoken about here. As Dan said, it's going to be a general economic overview, and I think this matters for everyone across the economy, including in the health sector. It's quite often said that the economy matters less to people who work in the health industry, and by and large that is true. But during economic downturns, the proportion of people that don't go to see a medical specialist for cost reasons rises by about 1%. And for dentists, that number who don't go to see a dentist for cost reasons during downturns rise about double that. So the economy does matter for everyone, including people in the health sector. And of course, this particular economic slowdown is unusual. All economic slowdowns are different. The one we had in the 1980s, very high inflation, very high interest rates, very uncompetitive Australian economy, big problem. 1990s, very high interest rates, too much borrowing, lots of empty office towers. The GFC, that was all about big problems in the global financial sector that hit us here. And of course, the very unusual about this particular one is that it's actually hit service sectors, which by and large were the sectors that historically had less impact by the economy. So very unusual about this economic downturn. And of course, this economic downturn has also hit directly the health sector. So the three things I'm going to quickly talk about is, one, because at the end of the day, this is at least as much a health crisis as an economic crisis, is start there, then move on to what are some of the economic implications. And finally, as a bank economist, I feel like I really should touch on house prices. So they're the sort of three things I'll quickly go through. Now, there's quite a few people on this call that will follow, the ins and outs of the vaccines, and many in terms of for the COVID treatment. And as you're aware, there's been increasingly good news over time. There's an outfit called the Good Judgment Project, which is made up of a whole lot of so-called super forecasters that really look at and analyse about when a vaccine might be widely available. And they believe there's something like a 90% chance that by this time next year, a vaccine will be widely available, which there's certainly been increasing confidence from the health sector. But of course, there's some chance it won't be. I still think there's good news though, because if we look at treatments for this virus across all age groups globally, that has also been improving. So we're getting better about dealing with this health crisis, even if we don't find a vaccine. Right? Our testing's better, our tracing is better, and our treatment ability is getting better. And the reason why I bring this up is that different countries and states are having a very different sort of approach to this crisis. Some states, countries, are focused very much, we're going to keep the virus out until a vaccine arrives. Other ones, particularly in countries like Europe and the US, it's very much, we'll just deal with this virus as it is. If it gets really bad, we'll shut a few things down, but by and large, we'll just deal with the virus as it is. So two very different approaches, and therefore the timing of the vaccine will matter. And of course, for some of those ones who are waiting for the vaccine, what happens if it doesn't arrive? So that's the really big issue from a sort of economic standpoint. When will the vaccine arrive? What happens if you don't? Because as I said, different governments have different approaches. Now then there's the economics of pandemics, if I can use that term. Some of you might be aware, or you're probably all aware, that we've had a lot of pandemics historically. Everyone sort of speaks about the Spanish flu early this century, but as you know, over thousands of years, been quite a few pandemics, and some of them have had major economic consequences. So the Black Plague of the Middle Ages, of course, that's the most quoted one because it had a very big impact. Death rates of 30 to 50% amongst European population meant basically serfdom just couldn't exist. The big reduction in labour meant that basically people's labour got bid around, and so this lord outbid that lord, and all of a sudden the power went from the lords to the actual workers. So that was a big breakdown of society. Both ancient Rome and ancient Greece were faced by plagues, and those arguably led to the fall in both those two empires. And the cholera outbreaks in England in the 19th century and the US early in the 20th century basically highlighted to people that health is actually a public good. It just wasn't sort of something that happens amongst the poor people, and that led to the development of public health. So plagues have had big economic consequences. It's not quite as clear whether this one will. So what essentially happens in pandemics is, unfortunately, a lot of people die, and that means there's a lot less labour around to actually do work, and so the economy has a really, really big problem. This time around, obviously quite a few people, the mortality rate is quite high, but nowhere near as big as some of those other outbreaks I spoke about earlier on. And of course, in this particular one, this particular outbreak, unfortunately, hits the elderly particularly hard, which is really bad for that segment of the population, but they're not in the labour force, so the economic impact is a little bit less. So this will have some economic implications, but nowhere near as widespread or big as those ones I spoke about earlier on. Now, there is some temporary impacts from COVID. One of the ones from an economist standpoint is that people's bank accounts, particularly for the wealthy 40%, have absolutely ballooned, i.e. they're saving a lot more. Now, one of the reasons, particularly as people in Melbourne can tell me, is that basically they just can't spend their money. So that's one big reason. But a second big reason is people are just a little bit uncertain. And what they do if you're uncertain, you basically start saving more. Now, I think this is just a temporary phenomenon. Providing the economy comes bouncing back, then people will start spending again. If, however, the economic slowdown lasts for a long period of time, then that might influence people, but I don't think that'll be the case. Now, there will be some longer term implications from the saving. One of the things you save, particularly for a business, is that you don't go and buy that equipment, right? You save that money. And because you haven't bought that equipment, that means investment or how much work you can do in the future will actually be less. So that's not so good. And one of the things the government has to do is, if the private sector, like you guys, like us, like manufacturers, are not doing the investment, then the government must do it, which is the reason why economists do so much talking about infrastructure spending. Another big one is, in economic downturns, people who don't have lose their jobs, they lose work skills. And the longer they're out of the workforce, the more the skills go away, and the less likely they will be able to get a job. And what that means, it becomes very, very, very important for governments to create jobs. And you must have heard Scott Morrison any number of times emphasise that, and the Reserve Bank have done exactly that too. The third big thing, which I think is could have a medium-term economic consequence, is in your space, and that's health. As you know, people have become more cautious about going to see the doctor or the dentist because of uncertainty about COVID. And of course, there's partly an economic element to that, which I touched on earlier on. And the longer that caution lasts for, the bigger the health problems will last. And I think one of the things that, particularly if this problem continues to last, is that governments might have to think about some sort of public education program about the necessity to get in touch with your health provider. Two other quick ones in terms of implications from the pandemic. One is, I was just speaking to Dan offline, Uber is becoming a bigger part of our life because a lot of people are sort of trapped at home. But while the pandemic has supercharged that sort of online shopping, it hasn't changed the fact that this is all very new. It was already starting to happen anyway, and it already would have happened. What the pandemic has just supercharged that. And then if you go in China, for example, where the pandemic is basically between February to March and by and large are moving on, their online shopping has just continued to pick up and grow. The amount of stuff that they buy online is equivalent to about 30% of their total consumer spending. Our number right now is 10%. So you can see the sort of potential for how much more online shopping. Now, as I said, partly that reflects the pandemic. We've got used to doing it. But with technology and so forth, more of that would have been happening anyway. So it's more supercharged what's happened. One of the other consequences, though, of the pandemic is the change in our population. Our population growth this year will be its lowest since the First World War. Right? So we are a big population growth country, but it's going to be quite low right now. Now, 2/3 of our population growth in recent years has been immigration. And as you know, the border is up right now. So essentially that's sort of by and large stopped. The big thing in one respect, that's not a bad thing. Probably over the last 5 years, we've become too reliant on population growth to drive our economy. So actually having to think about other ways to boost our economic growth is a good thing. But there's no doubt at all that we have, over 200 years, stronger population has helped us grow. And so one of the things we'll have to do over the next couple of years, particularly if we don't find a vaccine, is how do we let people still come in, still to help develop our economy? Because immigration has been a very important part of our growth, very important part of our innovation. And because immigrants are typically younger than the average Australian, it's been very important about supporting our ageing population. So that's a really big thing to look out for. So there's our first point, that the health outcomes still remain very important. Because there's uncertainty how that will happen over the next 1 or 2 years, what's going to happen to the economy will be quite bumpy. But overall, I think things will start to improve. And as I said, our efficiency in terms of dealing with disease is improving. What's the sort of short-term economic consequences of all this? Well, you might have read in the papers recently that our economy had a massive fall in the second quarter. And it was very big. There's no argument about that. But by global standards, compare ourselves to the US or Europe, Japan, our fall was a lot less, right? Mainly because we have dealt with the health crisis better than them. Now, going into this particular quarter, our economy will grow. It is growing and it will be stronger, but probably less by overseas countries. And one of the reasons for that is, and use Victoria's example, the amount of lockdown measures here is tighter than overseas. So our economic growth is picking up. Probably it's picking up more than in other countries. If we actually ask all businesses and consumers, how are you feeling about the economy right now? And the answer they'll provide is sort of, look, things are not great, and you guys know that. But what they'll sort of say is, things are not great, but they're not at recessionary bad times. Right? So that's sort of a good sign. Now, it does very, very much depend upon which industries you ask. If you go and ask someone who works in the airline industry, they will tell you we are in recessionary times. If you go and ask someone in the food and grocery area, or the someone who sells screens for computers, they'll say we're having a fantastic time. So average it out. The average over the overall economy is that it's not a great time, but it's not sort of recessionary time. Now, one of the extraordinary things about this economic downturn is what's happened to consumers' incomes. Now, in the second quarter, the amount of income in the economy fell over 8%. Right? There's 8% less income in the economy in the June quarter. That's extraordinary. However, consumers' income, the amount they had to spend in the shops, etc., actually rose by 2%. So economy down 8, consumers up 2. Now, why is that? Now, it wasn't because everyone got big wage rises. It wasn't because all of a sudden companies were paying big dividends or big rent checks came in, because all those things went actually backwards. One of the big reasons, governments gave out a lot of money, job seeker and job seeker keeper payments. The second one is a number of people didn't have to make mortgage payments or rent payments or tax payments. A third reason is that basically why people's bank accounts was up so high is that people couldn't spend the money. So what you got is people's disposable incomes rose and their saving rose by even more because they couldn't spend it. So in actual fact, households' balance sheets, in terms of how much incomes they've got, is actually in a reasonably good state. So that's another positive sign. But there's still the buts. So we've got the economic uncertainty. Consumers not really cautious about spending. Same with businesses. How do we get this economy growing if you, me, and all businesses and consumers around are not going to be driving it? Who's going to be doing that? The people that usually do it is the Reserve Bank, and they've been helping out. As you probably know, interest rates are at rock bottom levels, and if anything, they might go just a little bit lower over the next 6 or 12 months. Not big time lower because they're already really low, but just a little bit lower. So the Reserve Bank's doing the very best it can to make sure cheap financing is widely available. But let's face it, the level of interest rates is not the biggest issue for this economy. The biggest issue for this economy is just a lack of demand. There's just not enough people buying stuff, right? And the only people that can really drive that, if we're not doing it and businesses can't do it, the only people that really can drive that is the government. And the reason why households' income's up is basically because of the government. And given the economic outlook, which is basically things will get better, but still need substantial help, the government will still need to provide substantial income support for the next couple of years. And in fact, over above income support, they need to drive that economic growth support. And that's the stuff I was speaking about earlier on. They'll need to drive infrastructure sort of spending. They'll need to drive spending in the economy that creates more jobs. And in October, the government announces its budget. And that'll be very, very, very closely watched about how much spending they're going to put in the economy and where that spending will be. Because how much they do and where they do it will be the critical thing about how strong the economy will be in Australia over the next 2 years. Now, some people say, is the government going to be doing too much? Is it going to create too much debt? The amount of debts relative to the size of Australia's economy will be its highest next year since the Second World War, right? So just absolutely huge. Now, this is not a really big issue. The amount of debt right now for the Australian government is amongst the lowest of sort of rich countries around the world. Interest rates, as I've already gone through, are rock bottom. The government can borrow for 10 years under 1% interest rates. So the government can afford to finance it, and people are happy to finance it, and the low amount of debt means it is very affordable right now. So the bottom line for the economic outlook is we're past the worst. From here, the economy will grow. Partly how fast it will grow will partly depend upon the health crisis, but it will partly and importantly depend upon how much economic support the government provides. Final point, house prices. And what I'm going to do here is just go through the key drivers of house prices and put a sort of traffic lights. Green is a big plus for house prices. Orange is sort of a neutral, and red is a negative. One of the biggest drivers of house prices over a long time is interest rates. As interest rates go down, typically it's meant house prices go up. Now, we know interest rates are really, really low. Can they go lower? Well, as I said before, the answer is yes, but probably only a little bit. What is likely, though, is that very low interest rates are likely to be with us for some years. And the Reserve Bank themselves expects that for some years to be like at least 3 to 4 years. So interest rates are green, but maybe not a really bright green, just a sort of dull sort of green. The second one is how easy it is to get finance. Now, for most people on this call, that's unlikely to be an issue. Most of you have got decent jobs with reasonable incomes, so you should be able to borrow reasonably easy. But that's not the case for everyone. If we're having an economic downturn, yes, there is some uncertainty about whose jobs will be around. There is some uncertainty about which businesses will survive. So understandably, for some people, it'll get a little bit harder to get finance. So that is an issue for some people, not on this call, but some other sectors of the economy, which is one of the reasons, of course, why the government needs to come in and provide people more jobs. Which brings me to my third point. What is the feedback from the housing sector about the number one issue that they face right now? It's just the uncertainty of the jobs market. If people don't know if they're going to have a job, are they going to borrow money to buy a house? And that's probably the big issue right now. Strong economy means stronger housing market. Weak economy means the other. So that's the biggest driver right now. The next one is that old economics one, demand and supply. Demand is population growth. And I touched on that earlier on. Right now, that is slowing. We're going to have the weakest population growth since the First World War. So that's sort of taking away some demand for the housing. But going the other way, the number of places we're building is actually falling. So demand is slowing and supply is slowing, which is the reason why you might see that auction clearance rates have actually broadly held up around Australia. House prices have only fallen a little bit. What that means is that there's less people buying, but there's also less people selling. And so that's the reason why prices have only fallen a little bit. Now, there is a very big difference, as you can imagine, between cities. So prices have fallen by most in Melbourne and by least in Adelaide right now. And the one I'm quite surprised about is Perth. I thought Perth would have done a little bit better. More generally, in many cities, but in most cities, but particularly Brisbane and Perth, affordability is at very, very low level, very high levels right now. So it's a lot easier right now with very low interest rates and what's happened with house prices for people to buy. And so therefore, who's been one of the biggest buyers of homes over the last couple of years? First home buyers, because in most places, it's the first time in a while they've been able to afford to buy something. Who's been the least people be on the market for the last year or two? Investors, because there's a lot more places around. It's harder to rent out. Rents are going down. So investors are finding it a less attractive investment right now, particularly if you've got a time horizon of a very short term, or you've got cash flow issues. And the final one is different places. So the biggest oversupply of housing right now is units in the inner middle part of Sydney, Melbourne, and to a lesser extent, southeast Queensland. But on the other hand, houses, there's less oversupply. So what we're going to likely see, and what we are seeing, is that there's more price reductions on the unit side than there is on the house side. So as you can sort of see, the economics is very different depending which city you're in, and also what type of house you want to buy, or unit you want to buy, and whereabouts in those cities you want to buy. So I think the bottom line is that when there was this worry about the economic outlook, there was a whole lot of worries about is house prices going to fall a lot. What we've seen is that's unlikely, and the main reason for that is very low rates. Affordability is really improved, and that's really helped first home buyers. But in terms of getting a really big uplift in house prices, what we'll probably need to see from that is population growth start to pick up. And right now, that's not on the radar, but we'll see what will happen next year. So there's my three big ones. The health crisis, how we deal with that will be important. The economic crisis, that's to do with health and how much government support we provide. And in terms of house prices, that's to do with population and what's the outlook for the economy. So I'm going to leave it there. I think I've probably gone over a little over my 15 minutes, but I am going to turn it back to Dan to open up from Q&A. And let me just sort of say, Dan, up front, as I started speaking, a picture of yours came up and it looked remarkably like Tom Cruise. So I really it was a younger you, was it?
It's a very old picture, and I'm not sure whether the marketing team did some airbrushing on that when they posted that one, Peter, but thank you. I'll take the compliment. Thanks, Peter, for that presentation. That's great. We do still have a full sort of 15 minutes or so for questions, so that time is not too bad. We've had a couple of questions from Mike, who I believe is coming to us from Tasmania, to kick us off. But before I ask those, if anyone else has any questions, please start sending those through, and we'll get through as many as we can in the 15 minutes we've got. So, Peter, to that point that you touched on around sort of the different economies we've got, there's probably four broadly at the moment. Victoria, which is for obvious reasons doing its own thing. WA, which has decided to do its own thing. Tasmania, which is sort of separated naturally, and then the rest. Mike's question is specifically, what do you expect will happen in Tasmania given our unique circumstances? But I guess also in those other areas, to touch on a few individually for us.
Yeah, no, it's good. It's a very good point. So, thanks very much, Michael, for the question. And you are right. More now than ever, there are very individual circumstances. So Victoria is probably the biggest one. And, to me, there's a couple of things here. First of all, I think the Victorian government's probably been slightly pessimistic in terms of its views about how the virus will go. So I think, if anything, the roadmap for opening up might be a little bit quicker than what has been suggested. So hopefully that will end up being good news for Victoria. The more medium-term consequence of Victoria is, when we went back in June, optimism everywhere was really picking up. Everyone was thinking by August, September, the Australian economy overall would be wide open, all state borders would be open. And what's really hit is not only is the downturn, but the depth. And that's hit Victoria, but it's also hit some of the other states. And so that's really the unknown. That even once Victoria does open up, and I think will happen in the next few months, even when that happens, how are people going to react? What's their confidence going to be? So that's sort of the unknown outcome of this, because after the first one, people were quite confident. So what's going to be the second one? As you say, Dan, some of the other states are in far better shape, Tasmania being one, WA being a second. I think South Australia and Northern Territory are very much there too. They have opened up. As I said, Adelaide, house prices in Adelaide are actually up. Probably overall activity in WA is probably done best overall. And not only is that the fact that the health crisis is a smaller part of the game over there, but the main reason is that if you look at which parts of the industries are actually doing very well in Australia right now, virtually number one is iron ore. And where's all the iron ore? It's in WA. So WA is doing very well because that's the strongest industry and and that's a big part of their economy. So that's why WA is doing well. If you actually look elsewhere, Tasmania is probably a step or two back from where WA is at. And certainly confidence has fallen a little bit in Tasmania because it relies a bit more on the tourism. That hasn't been around for a bit longer. In saying that, entering this year, which economy was doing best? Tasmania. Right? So
Tasmania was really peaking, wasn't it? As we came into this crisis, Tasmania was really hitting a peak or really going through massive growth. So
that's exactly right. So, it's slowed and it's had quite a notable slowing, but because its momentum was the best, as you say, because of the peaking, it's come off, but it's in a better way than some of the other states because it started off in a better way. Queensland's also picking up. It's some of the feedback there is that some of the tourism from intrastate tourism is doing very well. And New South Wales is also doing okay, but because it relies on population growth more and is more closely into Victoria and got a bit more of a knock on confidence, it's probably just a step behind again. So there's a real sort of layering. WA probably at top, then Tasmania, and then we go from there.
A pretty good outlook for you there in Tasmania, Michael. Thanks for that question. We'll move on to another one. I'll put a couple together here. Michael had a question on interest rates as well, and so has Chris. I'll put the two together for you, Peter. Could we see ourselves going to negative interest rates in the country? And if so, what does that mean for mortgages and then the economy? And in line with that, as the RBA has significantly reduced rates so much, why haven't the banks reduced their rates further than they have?
Well, I think bank rates have come down a fair bit. And in fact, I think that this time around rates came down at least as quick as the RBA rate cut. So and
the margin between the RBA rates and the market rates is similar to what it was before the crisis.
Right. So there's been really no change on that front. And if you look at what the level of the mortgage rate is, it is really low right now. So I don't think that's a really. So I think that one there in this crisis, the banks have essentially passed on what the RBA has done. In terms of can we have negative rates, the Reserve Bank has made it pretty clear it really prefers not to have them. right? And one of the reasons is that as interest rates do go down, then that's obviously a plus if you're a borrower, but it's also good if you're a saver, right? What does that practically mean? You have to give the bank or whoever some money back. And so what that means is that there's almost like a floor in terms of savers. So as rates come down, it makes harder and harder for banks to lend profitably. So that's one of the biggest issues about negative interest rates. Now, does that mean you can, and that's the reason why the Reserve Bank, by the way, does not like negative interest rates. Now, as you correctly point out, Michael, and whoever asked the question,
Chris. Yep, Michael and Chris.
Yeah, asked the question, was it is the case that there are negative rates elsewhere. There is in Europe, is in Japan, and New Zealand are talking about it. So other countries are sort of saying maybe negative rates can work for us. So what's a scenario where we might have negative rates, given the Reserve Bank thinks it's not going to be a plus for us? And where it can be is, what happens if the UK and the US and New Zealand and Canada all go negative and we don't? What it would mean is our Aussie dollar goes all the way up, and that's a really big negative for us. And so that's the scenario where negative rates would come here. It's not that the Reserve Bank would want to do it. It's like the rest of the world would drag them to do it. So that's the scenario where it actually happen.
Do you think that's likely, or what do you?
Look, what I would sort of say is that given what's the global economy right now, how that's going, how it's improving, and as I mentioned, the outlook for the vaccine, all those things say to me is that the US doesn't really want to go there, and the economic and vaccine outlook suggests that they won't go there. And in that scenario, it's a low probability event. But you've got to sort of say that all the risks are that if the vaccine doesn't happen and we keep getting these waves around, then the economy could be bad. We know the unemployment rate's high, and if by the end of next year the unemployment rate still where it is in the US and Australia, then it's a chance. So it's clearly a bigger chance now than it has been for a long time. Does that mean our mortgage rates would go negative? If you look globally where there is negative cash rates, it's very rare to see negative mortgage rates. So what ends up happening is sort of obviously lower, but they're not often negative. But nonetheless, if you do get negative rates, you do end up getting a lower mortgage rate.
Right. Thanks, Peter. And thanks, Chris and Michael, for those questions. I've got a couple more coming through, which is great. We've still got about 10 minutes. So if you've got a question, please drop it into the chat group there. One from Shane. Peter, how is the government going to repay all the money they've been giving out? And how will this affect small business owners and high income earners? And obviously on this call, we're looking at people who are running medical and dental practices, vets, etc., who would fall in that category. So how's the government going to repay all the money they've been giving out, and how will it affect small businesses and high income earners?
Yeah, it's a really good question, because it's the thing that does worry a lot of people. And as I said, the amount of debt the government will run up to support the economy will be the biggest since the Second World War. So it's a really big economic question. So the short answer is right now they'll do it quite easily. Interest rates, as we just spoke about, that are extraordinarily low. So they'll be able to finance it very comfortably. And what the government rightly is aiming for is not to pay it back by taxing us more, which is, I think, implicit in the question down about people are worried about that. What this government's aim is that basically once we know that we're on a recovery path, i.e. the economy's improving and the health crisis is over, once we know that's the case, then what they're going to try and do is make sure economic growth is strong enough, which means incomes in the economy growth high enough, higher incomes help you pay off the debt. So that's the sort of aim. Now, partly they're going to try and do that by actually spending more money. I spoke about that. But partly, which they'll also try and do, is make changes in terms of taxes and regulations, not up for taxes, but more likely down for taxes, to give people the incentive to start up businesses and become more productive and to employ more people, right? So that's what this government will try and do. The question is, politically, will they be able to do all the changes they can make? And I'll use an example that's quite often in the papers or the news, industrial relations, or the sort of rules and regulations you employ people with. Employers would like to make that easy to employ people, but obviously the unions have got different views about what those rules should be. So politically, what can the government do? Another one in the newspaper just today is cost of energy, right? For many manufacturers, that is just far too high. How do you get energy costs down? And there's that big political debate. So the government is going to try and paying back the debt by growing incomes in the economy. The question is, can they make enough changes to allow more businesses to be more competitive so they can employ more people and pay more wages. So that's the big challenge. But right now, our challenge is get through the health crisis and keep people in jobs. That's our biggest issue today. And then let's worry about the debt down the track.
And certainly all the current government's indicators, federal government's indicators, are that they want to continue with those tax cuts for higher income earners, those staged tax cuts. They're intending to continue with that program, aren't they? So
yeah, that's exactly right. Sort of, this very much is the philosophy of this government is basically the most productive economy is the one that's going to allow the economy to grow best, and the most productive economy is one where the private sector makes most of the sort of decisions. And the way you do that best of all, is to have his taxes as low as you possibly can. So that's what they're going to be trying to do. And looks like very much that there will be some tax cuts coming up, probably to be announced in the October budget.
A question here from Danielle, which is close to my heart as I'm here in Ballarat. She's asking, what are you thinking about house prices in regional cities? And in particular, using the example in Victoria at the moment, all the data that we're seeing is showing that the regional Victorian cities, in particular the major regional cities, are seeing growth in a time when Metro Melbourne prices are under pressure.
Yeah, so I think one of the things that people are speaking about is sort of, the problem with pandemics is, you're with people, and so more people start to think, well, maybe I'll go to where there's less people. And that's sort of the attractiveness of lots of regional centres. I would say that, if you look at places like Geelong, Ballarat, it's also the case up here in New South Wales, the Central Coast, Wollongong. If you go to southeast Queensland, places like Toowoomba, those places were actually places with very fast population growth, even before this crisis, and quite strong house price growth anyway, because, they were close to Sydney, Melbourne, Brisbane, but not with the house prices, and for many people had a better lifestyle, which I'm sure you can tell us about, Dan. So that was already there anyway, right? Maybe the pandemics picked that up, but I think probably the other really big thing is that if you think about Melbourne in particular, but also to a less extent Sydney and Brisbane, where has all the supply and housing through Australia been? Maybe those three cities. And then I spoke about population growth. Which city benefit, if I can use that term, the most from strong population growth? Melbourne. Where does most of its population growth come from? People moving interstate or people coming from overseas? What's not happening right now? So Melbourne's the place where there's been, had the biggest hit to the population in terms of the movements, had the highest supply. So that's why Melbourne City itself has seen the biggest price changes, whereas places like regional Victoria, places like Adelaide, they've seen different sort of, not as much supply. It hasn't seen as much a bigger fall in demand, and hence why its house prices have done better.
Keep those questions coming, guys. We've still got a few minutes. If anyone's got another question they'd like to place there in the chat, we'll make sure Peter does his best to answer it for us. Following on from that question, Peter, and what you touched on there about that population growth, you mentioned that you believe that currently the holdback in household spending, I guess, and people being a little bit shyer, savings going up, you think that's going to be a short-term phenomenon. You mentioned in your presentation, and that when we can open back up, you think people will get back to that more normal pattern, or the pattern they were in pre-COVID, pretty quickly. You just touched on there the effect that's having on capital city house prices, particularly on the East Coast, where migration is not going to be available. Do you also think that obviously we're banking on a vaccine, but let's say that the vaccine comes in the best possible time frame in March, April next year, we're starting to hear about rollout dates. Do you think then that migration, particularly international migration, that supports those house growth prices will spring back, or do you have any view on that taking a little bit longer?
So I think first of all is that if you just go about when the vaccine's done, when it's distributed, who's going to get it, and so forth. Probably it won't be until at least the second half of the year where you get wide enough people having it, and then there's sort of a confidence impact of everyone being confident that enough people's got it for me to be able to travel around, particularly international movements. So it might be a little bit longer than sort of the first half of next year. So I think that the first point is that in terms of underpinning my sort of optimistic view is that basically we're dealing with the health crisis better, and the economy is improving. Even though next year won't be an unbelievably good year, it will be a better year. And because basically this has been a tough year, there's no doubt about it, but it's only been the last 12 or 18 months. It'll be easier for people to go back to normal, right? The longer though this lasts, the more likely though the sort of saving problems and so forth will be there. Which gets to your point, Dan, about sort of population movements. So the longer we wait for a vaccine, or the longer people's confidence are not there, then the less travel we'll see, the less travel people movements we'll see, the lower the population growth. So I think it really comes down to, again, how long it takes to get over the health crisis, but also once we get through that, what is the state of the economies? Because at the end of the day, the reason why you travel to a place, either for just for a holiday, or the reason why you move to a place is the economics. If you've got no money, you're not going to go for a holiday overseas. If you're worried about the economic outlook of a country, you're not going to move there. So that's why it's really the answer to that is the health and the economy. If you get those two things right, then the quicker the population gets back to normal.
Excellent. We've got one last question here, and that'll just about take us right up onto time. So from Richard, Peter, the question is the government likely to slow the superannuation levy increases to encourage employment as one of those measures that you spoke about, their focus being?
Yeah, look, I'll be a little bit surprised if they don't, because at the end of the day right now, a superannuation is a higher cost of labour. And, I spoke about sort of incomes overall in the economy is down 8%. In some sectors, obviously, it's down substantially more than that. So to actually sort of say, well, by law, you must pay a higher labour cost in that sort of environment looks a little tough. So I wouldn't surprise me at a minimum whether they actually postpone that. I don't think there's any political appetite to abandon it. I think some people talk about it. I think by and large, the political consensus is that it still should happen, but probably outside the current economic environment. And I think particularly the government would be of that view.
Fantastic. Well, thanks, Peter, and thanks everybody who's tuned in this evening, and particularly thanks for engaging with those questions. Certainly, the reason we like to put these webinars on is to enable you to have some of that engagement and that one-on-one time with our presenters. So thank you very much for that. On behalf of BOQ Specialist, we're very happy to be bringing you this webinar series, and we'll continue to do present these informative sessions. If you've got any feedback that you would provide or something particularly you'd like to see, please reach out to us. And for any other of your finance needs, of course, reach out to us via our website, boqspecialist.com.au. But for tonight, thank you all for tuning in. And Chief Economist Peter Munckton, thank you for your time.
Thanks very much, Dan. In fact, can I just actually put my own little ad in? Every week I put out a little report. There's plenty of little pictures in there talking about topics on economic interest. If anyone's got any interest in actually getting that report or being on my distribution list, please contact your local BOQ West representative and they'll pass those to me. You can actually put your details in the chat if you like, and I'll make sure you're on the distribution list.
Yep, and you can follow the links that were on the webinar invite for tonight, or as I say, just visit the website and follow the links and your message will get through to us. Thanks, Peter. Thanks all for tuning in. Enjoy the rest of your Wednesday evening.
There we go.